Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. Today's episode, I want to talk about some risk moving forward with regards to Tesla as a company and obviously Tesla as a share, right? The stock price itself. So I wanted to touch on a few things that might be some headwinds or just some things that you should keep an eye out for that could have some serious repercussions and effect on Tesla, again, as a company and as a stock. So in this episode, we're going to talk about a few key topics. We're going to talk about the Giga Shanghai prolonged closure, what that means, again, from a stock and from a company perspective. We're going to talk about competition from other startups, other OEMs, and I think we're actually starting to see some things happen, and I'll give you a personal anecdote within my life. I want to talk about some risk regarding FSD Beta moving forward, what it could mean, again, from a stock and a company perspective. And finally, we're going to move into talking about inflation as one pillar of a risk. And then we're also going to talk, and even though they kind of have a lot of overlaps, we'll talk about risk from the Federal Reserve. All right, so all that and more in today's episode. Again, today's episode is mainly about making sure we're not in our own echo chambers, and instead we're thinking rationally about even risk and potential negatives for Tesla. All right, so this can be a very honest conversation off top of my head, stream of consciousness, but something that we should all be aware of and make sure we're not living with blinders on. All right, before we move forward, do me a favor, hit the like button, hit the subscribe button, ring that bell. If you want to help support the channel, you can find my Patreon link down below in the description. All right, with that said, let's get into it. So first, let's talk about Giga Shanghai and the prolonged lockdown that we're seeing there with the whole zero COVID policy. All right, Giga Shanghai and just Shanghai in general is still shut down. Today is April 9th. All right, we're more than a week into the quarter. All right, so we're past, at least 1 week essentially just gone from production with Tesla at Giga Shanghai. So what does this mean? If we think kind of conservatively and we assume that Tesla's making 2,500 vehicles per day, that puts us at 77,500 vehicles we might miss out if Tesla's closed down for the entire month of April. Now, I'm obviously putting in 31 days in there. 2,500 vehicles is probably a little more than what they currently have as far as a run rate, but the idea is to be a little more conservative with what we're thinking here. So that's 77,500 vehicles that we would be out. Okay, that's a lot of vehicles, especially going into a Q2, right? We don't want to really be dealing with that with the earnings, but it's inevitably something we're going to have to deal with. So let's keep talking about this. So let's take that 77,500 vehicles in a month, and let's try to maybe be a little rational about what it could mean, how we could make it up. So if you take into account the days that we were out in Q1, right? Call it about 12 days, maybe 13, maybe 11, depends how you want to see it. So just say roughly around that ballpark. What we're really with is looking at April and having essentially 19 days of no vehicle production or deliveries. So if we take that 19 days and we go by the 2,500 vehicles a day, again, a conservative number, what we're left with is 47,500 vehicles that we have to make up for. So how could this possibly be done? Well, first, according to what I have here written out, let's assume that Berlin can do 12,000 vehicles in Q2. That's not a tall order, really. It's 1,000 vehicles a week. I think that's a pretty slow ramp. There's already rumors and people who are going drone flyovers that are seeing about a production rate of 1,000 per week. So let's assume that. That's 12,000 vehicles that we do get. All right, and then let's look at Austin. Let's assume Austin is going to have a very slow ramp. Let's say Austin only delivers 3,000 vehicles. And I think that's actually a good number because we have to keep in mind that, the 4680 is what they're using. How fast is that ramping up, right? It's not just a matter of producing the vehicles, but it's also the batteries, the power pack, right? All that you have to take into account. So let's just say a modest 3,000 vehicles in all of Q2 for Giga Texas, okay? So that's 12,000 for Berlin, 3,000 from Austin. And let's assume that Fremont can do 5,000 extra vehicles, and that's between Y, 3, X, and S. Let's say they can just do a modest 5,000 vehicles extra in Q2 from Q1. All right, so far, I think we would agree that all this seems pretty fair, conservative, and manageable. Well, if you take all that into account, Berlin, Austin, and Fremont putting an extra 5K out, that still leaves us with a debt of 27,500 vehicles to make up from April out of Giga Shanghai. Okay, so how can we make this up? Well, what if Giga Shanghai switches their strategy? So normally, In the first 1 to 2 months, Shanghai will export vehicles, right? Put them on ships, send them over to Europe, send them over to Australia, etc. Well, what if for only Q2 they said, well, we're only going to do local deliveries. We're only going to deliver to China. We have huge demand, so we're only going to ship to China so that we don't have to worry about the delays of traveling, and we'll actually save costs by not having to ship in that quarter. All right, so that switches the strategy, but there's still a production issue. With the production issue, right, they still have to make up a month worth of production. And how are they just going to do that over the next 2 months? Well, all right, we're down 1 month. Okay, so let's say that Tesla Giga Shanghai could do an extra 500 vehicles per day on top of the 2,500, right? That's an extra 500 over about 60 days, which would essentially give them another 30,000 vehicles. And that would essentially eclipse the still negative 27,500 they're at. Right, that's still a tall order to expect with regards to Shanghai being able to make that up. I mean, 500 extra vehicles a day, that's a tall order, right? That's not just, small potatoes. But even if you cut that in half, that's still an extra 15,000, and that still gets them in the ballpark of where they currently are. All right, now this also would assume a lot of things. This would assume that Tesla doesn't have an issue with the supply chain, that the supply chain can all come up and they can get going, and Tesla can, not have to deal with any bottlenecks or choke points within that. So there is a path, even if Tesla's completely shut down in April, for them to still at least make the same amount of vehicles that they did in Q1, or at least get very close. So I think that would be a big deal. I think that would signal to the markets that Tesla's doing some incredible things, and they've been able to manage all of this. Shanghai issues aside, it's going to be a very tough quarter for Tesla. You're going to see a lot of analysts bring down their estimates for deliveries, but don't ever underestimate Tesla. Don't ever underestimate Elon. For all we know, they decide we're not going to let Shanghai be what dictates whether or not we hit our numbers. Instead, we'll just go ahead and ramp up even faster out of Berlin, ramp up even faster out of Giga Austin. Again, we'll still hopefully have 2 months that we can guarantee for Giga Shanghai to produce. It's just 1 month we really have to make up. And even then, there might be a bright side. Maybe we'll only be out for half of April. Maybe Giga Shanghai comes back on the 18th, as is being rumored right now. So there's still reason to be optimism, but let's look at things from a conservative perspective. All right, let's move on to the next risk for Tesla. Competition from others, from OEMs, from startups. Now, look, I get it. Everybody, we all say the same thing, and it's true. We're not wrong, right? There's, at the end of the day, where are you going to get the batteries from? How are you going to make it, right? Are you going to be profitable, right? Do you have as good of statistics, whether it's range, performance, efficiency, cost per efficiency, right? If you were to do a model like that. No, Tesla still wins out no matter what. But here's the reality. Not everybody cares about that. A lot of people simply care about the aesthetics of a vehicle. And for some people, the S, the X, the 3, and the Y, it just doesn't do it for them. And if they wanted a Cybertruck, well, they can't get that anytime soon. So what are the alternatives? Well, a lot of people actually really like the F-150 Lightning. It's an iconic car. It is. The design, the truck, it's iconic. It's timeless, right? It's stood the test of time over all these years. And it's the #1 selling vehicle in the United States. That's kind of hard to ignore. With that alone, if somebody wants that, they're probably going to go for that. Not that they're in production or anything yet, but it is something to keep in mind. Also, the Taycan, the Hummer, right? Some people just might like the way it looks, and that's all they care about. They don't care about anything else, especially if all these vehicles are costing around the same amount. I'll give you an example. My neighbors, last night, we were out with them, we had dinner, and they were talking about how they have reservations on the Lightning, on the Taycan, and on the GM Hummer. And they're essentially going to buy whichever one comes first. They didn't seem to care about performance. They don't really care about range or any of those things. All they cared about was the aesthetic. Now, I will say they are what I would call slow movers, right? They initially bought a hybrid BMW, and they had that for about 3 months before they sold it. And now they're looking at an EV. And of course, they're looking at GM, Ford, right? They currently drive a F-150. So that is their aesthetic. That's their proclivity to go towards that. However, like I said, I think slow movers will tend to go towards these OEMs when it comes to electric vehicles, much like some people bought a Zune instead of an iPod, right? Some people decide to go with the BlackBerry version of the smartphone versus an iPhone, right? We always see this, but the truth is this is a real part of the population, and they do have a certain proclivity to go towards or make decisions specifically based on design. If there's one thing we can't deny is Porsche has an iconic design, Ford has an iconic design. The GM Hummer, I still think looks ugly. We've talked about the risk of the competition, although I don't think it's a big risk. In the short term, OEMs, startup, none of them are really going to be a factor, but it is something just to keep in mind moving forward. At the end of the day, Tesla can't sell every EV out there. 25% is what I would expect in the future, but it's going to take a village in order to get the world to sustainable energy. So as much as I don't think this is a risk at all to Tesla in the immediate future, it's just something to keep in mind moving forward. At the end of the day, I think one thing will lead everybody back to Tesla no matter what, and that's FSD, which actually happens to be our third risk that we need to be very aware of. So why is FSD Beta a big potential risk for Tesla stock and the company moving forward? Well, first of all, let's keep in mind, FSD Beta is going wider and wider as far as the releases go. At Cyber Rodeo, Elon Musk just got done saying that by the end of the year, they'll go wide release in North America with FSD Beta. So what does that mean? Well, that means that there's a lot of risks that can come with that. You can have an accidental death that occurs from it. You could have just a general accidents happening, right? Issues, people not paying attention. You have bad publicity risk where nefarious people or just people who are trying to get out of owning the fact that they screwed up, just blaming things on Tesla FSD or autopilot. We already see that happening all the time. So these are things we shouldn't ignore. And a lot of this will create bad press for Tesla. Now, again, Tesla doesn't seem to ever react to any bad press or anything unless it's outside of the United States or North America. But this is the market. So in this market, in the North American art market, Tesla doesn't respond to FUD. Tesla doesn't respond with their side of the story on anything. They just ignore it and they leave it at bay. And that's what Tesla does. So it is something we're going to have to be aware of. And you better believe that will have an effect on the stock, and it could have an effect on the company itself. So with regards to regulators and whatnot, it's a risk that we need to be aware of and we have to be cognizant of. With that said, there's also another risk. Other risk would be them actually not releasing FSD Beta to a wide release in North America by the end of the year. Why is this a risk? Well, it's a risk because you don't want Elon and Tesla to get this reputation, which they kind of already have, of always saying they're going to do something and then never delivering on time, right? I mean, we can talk about the Semi, we can talk about the Roadster, we can talk about the Cybertruck, we can talk about FSD Beta. I mean, there's all these promises, all these great ideas, all these prototypes that we see, but then they just take so long to come out into fruition. All right. I mean, even Giga Berlin, that took about an extra 6 to 8 months. Austin seemed to have been ready back in December, maybe January, and it took all the way till April to open. So while we have the patience to wait for all these things to come to fruition, a lot of investors, a lot of analysts, the people who look at things quarter to quarter, they simply don't. And they expect Elon and Tesla to deliver on the timetables they give. That is a risk for the stock. It's a risk for the company. It's a risk for the reputation. Now, at the end of the day, I think they're going to deliver. All right. And I think although all those risks exist, and with regards to the risk of, fatalities or crashes or naysayers, nefarious people, you're never going to be able to have innovation without all of that being the risk. So to me, it's like, okay, well, that's already baked in. We already expect to have this risk there. Regulators, all that. We're trying to change the world. So we can expect that already. So there are risks to this. But man, if the risks are right here, the potential upside seems to be up here. All right. It's just worlds different, right? Order of magnitude different. And the best part is that so far, FSD Beta is definitely not baked into anybody's numbers at all. Meanwhile, at Cyber Rodeo, we heard Elon kind of spill the beans talking about them working on a dedicated futuristic robo-taxi. All right, we're talking about no pedals. We're talking about no steering wheel. Right, we're talking about no side mirrors. I mean, probably no rear view mirror. Right, less hardware, less things, and who knows what you're doing inside? Maybe it's a pod. Maybe there's TVs. Maybe who knows? Like what it's going to be like. It might be a new entertainment as a platform model. Right? I mean, who knows? But the point is, they seem very confident. Drew seems very confident. Zach seems real confident. Elon keeps talking about it. It seems like at the end of this year that they're going to actually start testing this out. And they clearly already have a design which seems to be ready to go with regards to a robo-taxi. It might even be in prototype already. We're just not aware of it. I think with regards to FSD Beta, there is a risk, and the risk is really short term, and it's mainly to the stock. Okay, now if FSD Beta can go wide release at the end of this year, and if it can deliver on what it promises to, or at least get close, I think we're going to see a big run in the stock because of this. And Elon's reputation will be that much more cemented in the history books. All right. The guy who didn't just create an electric vehicle company, but took the first real step towards real world AI. Big deal. All right, let's talk about the last two risks, inflation and the Federal Reserve. Inflation. The biggest problem with inflation right now for Tesla is that there's only so much time that they can pass these costs on to the consumer. Up to this point, it seems like they've been able to do that very well. And consumers are just so abundant out there as far as demand goes that Tesla can get away with this. But there's going to come a point where Tesla can't keep putting it onto the customer, and they're going to have to eat some of the costs, and that's going to have an impact on margins. Now, that's where I'm sure they can do some clever things with FSD to balance things out with the factories, etc. So that's something that could be coming down the road. But I think inflation personally is starting to peak out. We'll talk about that in a second here. The other risk is with goods, right? Cost of goods, cost of raw material, right? Just look at the price of lithium. Lithium is going through the roof. However, although this has been a risk that I've been worried about, you talk about nickel, you talk about lithium. We saw Elon address this last night, talking about how lithium prices have gone so high that Tesla may need to get into the business of mining lithium. This is a big deal. This is a very big deal because this is Tesla doing Tesla things. Just like with the chip shortage. Whenever chip shortages were happening and prices were going up for chips, what did Tesla do? They pivoted. They took the chips that weren't being used for the automotive industry. They wrote new firmware for it, for many different chips, applied those firmwares to it, and they used that in the vehicles. This is the same thing, right? When inflation, when cost of goods go high, true innovative companies find other ways to make things more efficient and find workarounds that inevitably become the new way forward for any company. So just like you see everybody trying to figure out how to do things the way Tesla does right now, well, now Tesla's looking at doing things even more different by getting even more vertically integrated to potentially get into the mining business for lithium. This is huge. This is a very big deal. And if there's one thing we know is that Tesla moves fast. And they're not going to waste time doing this. For all we know, maybe they decide to buy a little mining company and then they go in there and they look at what they're doing. They iterate. They find ways to be more efficient. I mean, who knows what they do? But the point is, this is just yet another out-of-the-box way of thinking for Tesla. Extreme vertical integration. You won't see any other OEMs doing the same thing. Now, the final risk is the Federal Reserve. The Federal Reserve really seems like they don't know what they're doing. They've been lagging the markets nonstop. They keep switching their terminology on what they're going to do. Is it transitory? Is it not transitory with regards to inflation? And really, the only move the Federal Reserve right now has is to essentially reverse what they were doing by buying all these treasury notes. Instead, they're going to let them essentially expire and not buy more, and they can increase interest rates. Now they have what we would have called more dovish or more optimistic, more bullish people out there within the Federal Reserve. Now they're starting to come out and sound hawkish, or in other words, bearish, meaning that they think that they need to raise rates even faster. And it seems like the Fed is really trying to use their messaging by having people out there go on CNBC, go on Bloomberg, in order to control the narrative, to freak out the markets, to make the markets price in these rate hikes before they ever happen. And it's also almost like a litmus test where they're testing to see how will the markets react if we did this. And that essentially signals to them, should we do a quarter? Should we do 50 basis point rate hike moving forward? Here's the problem. I think the Fed is making a very big mistake by choosing to listen to these old, outdated inflation metrics like CPI, right? I mean, there's many metrics that are used to determine inflation, but I think the Fed is using the wrong metrics, in my opinion. And the reason is because I live in the everyday world, as do you. And what I'm starting to see is everybody's talking about inflation. There's nobody who isn't talking about it. Right? And then I'm seeing people make different choices now with their purchasing power. Now, what happens is as people stop purchasing things, right? That essentially takes that demand out of the market. As that demand comes out, well, that gives supply chains a chance to catch up to all of the demand that was out there, right? Which could eventually start to bring inflation down. Now, as we go throughout the year, I think we're going to see inflation peak out and go down. It might even peak out in April, but we won't get the April numbers until May, unfortunately. But the point is, I think that we're kind of at an inflection point, and the Fed tends to lag. Their data tends to lag. So what could happen? I think the Fed could move too fast, and they could really go ahead and hurt the market, not just the stock market, but also our economy, right? That's why everybody's so scared of a recession right now. Now, although I do think recessions are somewhat inevitable when everybody thinks a certain thing, but that should tell the Fed a lot. And if the Fed wants a soft landing, I think they need to move a little bit slower and stop being inconsistent with what they're doing. Now, they've left a ambiguous door wide open for them for moving forward, but this opens up a lot of risk to the stock market and to the economy in general. That's why you saw the 2 and 10 year yields invert. Now they've inverted back since then, but who knows what this means moving forward, right? Everybody thinks they know, but the truth is nobody does know. What we do know for sure is inflation's here and it's starting to pile up. And in my opinion, the people I'm seeing around, people are choosing to stop doing certain things. And so this is the first sign of things are getting better, in my opinion. And the thing is, no matter how much the Fed raises interest rates, it's not going to change the supply chain issue. All right, at the end of the day, I don't care what anyone says. This inflation problem is 100% to do with supply and demand and the supply chain. If we had enough supply to overtake the demand, we wouldn't have any inflation. That's all inflation is. It's more demand than we have supply for. And I don't care how much the Fed raises their interest rates, it's not going to fix the supply chain. Fix the supply chain, you'll fix the demand issue. All right? It's really that simple. And the problem the Fed's going to run into is what happens when they keep raising rates, but we still have a decently high inflation. I don't think it'll be as high as it is now, but what are they going to do? They're just going to keep raising it forever? That's obviously not sustainable. So I think better efforts from the White House administration would be to fix these supply chains. All right, so lots of things happening here, lots of potential risks, but at the end of the day, we invest in good companies for a reason. And the beauty of Tesla is that they're a good company with a very healthy balance sheet, arguably one of the better balance sheets of any company you can invest in. Now, moving forward, I think Shanghai is the main risk that we have. I think Russia-Ukraine is essentially a story that people seem to not talk about or fear anymore. It seems like the nuclear option is kind of off the table at this point, but you never know. Knock on wood, we don't ever want that to happen. But it seems like things are settling down over there. Doesn't mean we're anywhere near any peace talks, but things do seem to be improving. With regards to the Fed and inflation, all that, I think we're going to start seeing some numbers, CPI and all that come out that show that inflation is starting to slow down. But unfortunately, I think we're also going to start to see that the economy is slowing down as well, which is something that the Fed's going to have to maneuver, and who knows what it means that they're going to do. Now, Tesla, at the end of the day, I think Tesla will be fine. All right, Tesla is going to manage through this. I think if nothing else, the fact that they have a stock split coming up, I think that will keep Tesla more or less at equilibrium. Maybe we go down to the 900s, but I don't really see us falling much lower than that, in my opinion, based off today, April 9th. All right, we're going to leave it there. Hopefully, you guys thought this was a helpful episode, kind of, taking the rose-colored glasses off a little bit, especially after Cyber Rodeo. Cyber Rodeo was so exciting. We saw so many good things, but sometimes it's good to take a step back, get a little grounded, and remember that there are other things going on out in the world. All right, we're going to leave it there. Don't forget, if you want to help out the channel, you can find our Patreon link down below. And as always, I hope you guys enjoy the rest of your weekend. Don't forget, hit the like button, hit the subscribe button, ring that bell. Be safe out there. I love you all. Peace.